Hello, class. Wanted to talk to you a little bit about using accounting information and what it is and how you might use it. To do that, I'm going to illustrate with a little bit of a story. Let's say that you have an opportunity to eat at a place called Shake Shack. There's a couple locations over in Philadelphia, and you see it after you've been shopping at the King of Prussia Mall, and you eat there and it is delicious. You think, wow, this is a great restaurant. I wonder if it would be good investment. I wonder if I could make any money by investing and buying stock in Shake Shack. There are two ways that you can make money on a stock. You can buy at a price and it will go up and you sell it for higher than what you paid for it, or it could pay you dividends. Both of those will result, or either of those will result in you getting a return on your investment. And that's the reason why we invest. And so as an investor, you're interested in whether or not Shake Shack can provide you a return on investment. So like most people, you go to Google, you search Shake Shack, and you find the website you see in front of you. This tells you about their menus, it tells you about their locations, it tells you their story that started in New York City, started with a hot dog stand back in 2001, so forth. But you need more information about how they do financially. Are they making any money? Are they successful in selling their product? That sort of thing. So you're going to have to look a little deeper, and they usually put it down further in the website. And if we go down to the bottom, we'll find a place where we can locate our investor information. And then you look for financial reports. And lo and behold, you come up with this report, which is the annual report that Shake Shack provides to the SEC and all companies that are traded on the stock exchange. So this is Form 10K. We're going to look at it a little bit, but I also want to show you that we could look up the price and what the history is. It's a relatively young company. It has only had its stock traded publicly since February of 2015. So this chart shows you what the price has done over that time. So if you would have bought here at the beginning and sold here, you would have made a lot of money. However, since then, the price has primarily gone down. You can see there's some ups and downs since then, but lately it has not been very exciting. And the question you might ask yourself, well, is there a possibility it could go back up to this number of 80 or $90 per share and I could make money like they did back at the beginning? So we're going to look at the history a little bit. We have to look kind of backwards to see what happened that maybe it will, so that it could repeat itself in the future. So once I have my SEC 10K, there's a lot of explanation. The first dozens of pages tells a story again about their competition, about how they're getting their brand awareness, how they operate, all of that sort of thing. This is all part and parcel of accounting information, even though it's words and we usually associate accounting information with numbers. I want you to understand that it's not just about crunching numbers. Accounting is about communicating a story, and in this case, Shake Shack's story, to everyone who might invest or work for or loan money to the company. So there are a lot of people who would be interested in Shake Shack's story, whether you're selling something to them and expect to be paid back, if you want to work for them, become a manager, and you're expecting to be promoted, and you want a company that's going to be growing and expanding and therefore would have lots of opportunities, or if you're like as we mentioned earlier, an investor. So I'm going to cruise down through a lot of this explanation to what we're going to focus on this semester, and that is the financial statements, which is usually in here quite a ways after the various things that are required by the SEC to explain this information. But it's usually got a index and some, you can link to it if you want, but we're just going to scroll down. We get a report from the management, a report from the accounting firm who checked the numbers, and then we finally get to what we are going to learn a lot about this semester, and that is the financial statements. And what we're trying to do is learn how to communicate and tell this story. Right now, this may look like a lot of terms and things that you're unfamiliar with, almost a foreign language. And that, in that way, accounting is a language. It's used to communicate. And we need to learn some of the language, some of the vocabulary, some of the things that are communicated here so that we can read or explain this story. So first of all, for instance, as you see in front of you, you have assets listed in big bold letters, and then total assets as a kind of a total of all those numbers. So there is some number crunching here. But the question might be in your mind, what is an asset, and how does it, what does it mean? What are they communicating by telling me that they have these assets? Well, that's an important question, and one that we're going to answer as we go on. There's some simple things here and some complicated things. For instance, let's just look at the consolidated statement of income, or sometimes referred to as the income statement for short. And we see that at the top of that what's called shack sales. Well, that's sales of burgers and shakes and all of those things at their shacks. And if you look at that line item, you see that for the year ended December 2014, they sold 112 million, because this was all in thousands. They rounded to the nearest thousands. And then in 2015, 183,219,000. That's a considerable increase. That would be something that would be seemingly very positive for a company, their history of being able to sell more products. And that would indicate that in the future they should be able to increase that and continue to grow and add new locations and new sales as they become more popular. So that's a good sign, something we might think might lead us to want to invest in them. So see how simple that was. It's not, those are just not numbers. That's an increase of $71 million in burgers. That's a lot of shakes and burgers sold over what they sold the year before. Of course, here we are in 2016. This is as of 2015. Question is, have they been able to do that again in 2016? And we'll have to wait a couple of weeks for them to get their numbers all put together and communicate that story, see if the story continues to increase. Based on what the price of the stock is, most people don't believe that is going to continue, that trend is going to be a positive one, and that's why the price is on the downside. So that gives you a basic idea of how someone uses this information. When we find something we don't understand in our financial statements, often it is explained in what's called the footnotes or notes to the consolidated financial statements, and they will explain how they use certain terms, because every company is different. While we have some rules in accounting on how things are done, really every company is so different that there's no way that we can prescribe the same format, the same terminology for every company. So just like you and I are different, and everybody in this class is different, and we use different terminology, and to say we all have to wear the same clothing or same other things would be not productive. Same thing with financial information. So we have to be a little flexible in our terminology and our vocabulary, but we do want some things to be the same. For instance, like what is an asset? How do you calculate sales? Those things should be similar from company to company so that we could compare Shake Shack financially to other companies that do the same thing or even that do different things.